I guess I'm live. We were going to have a card, maybe some music, but I guess this is live at this point. So hello, everybody. We are on Eustace Live today, coming to you on a topic that I'm particularly fascinated with. My name is Mike Mills. I'm a branch manager here in the Dallas-Fort Worth area. And today, I have a very special guest. This is kind of, again, a personal topic that I was interested in and really wanted to get him on to discuss. We're going to chat a little bit about how blockchain and crypto is impacting the mortgage and real estate space. And today I have Mr. Jim Park, who's with us. He's the executive chairman of the Mortgage Collaborative, and has a ton of history in the mortgage industry and has been around for quite a while. And this is also, in our discussions, kind of a I guess you would call it like a pet project or pet interest for you as well, because you can kind of see the tea leaves and where things are headed. And I know right now, nobody cares about blockchain and nobody cares about crypto. Everybody's worried about rates in the market and prices. And, this might be far off the radar to some extent, but I do think it is something we need to pay attention to because I do think it is going to impact us soon. So welcome, Jim. Appreciate you coming and spend a little time with us today. So tell us a little bit about yourself first, so everybody kind of knows what you do. Tell us a little bit about the Mortgage Collaborative, where you came from, how you got to where you are, all that kind of fun stuff.
All right. Hey, thanks, Mike, for having me on the program. And I forgot to wear my black T-shirt.
Sorry, we're real casual around here.
No, I would have done the same thing. I got all dressed up for no reason.
Yeah, there you go. Sorry.
The Mortgage Collaborative's been around for about 9 years now. It's a network of small, mid-sized, sometimes sort of relatively larger mortgage originators. Collectively, we're almost 300 members. We originate about 400 billion in origination as a collective unit. But obviously, everyone's seeing that volume drop precipitously over this last 6 months. So it's probably a bit lower than that, but we still represent a large market share. We do represent the unique situation of the small, mid-sized lenders throughout the country to make sure we're competitive as a group, that our members are profitable and they're executing as they need to.
And you guys have a great job, or I guess are in a good position to kind of keep the pulse on what's happening across multiple markets and multiple regions of the country, right?
Absolutely. Well, Kate DeKay, your CEO at Eustace, is a board member, has been a longtime member, but we have a lot of firms, a lot of companies similarly situated as Eustace that are part of the organization throughout the country. We are in all 50 states. And so we have like really small originators, maybe doing 100 million a year, to someone doing like 10, 15 billion a year. So we got a broad swath of members and have a pretty interesting perspective on where they sit as a group. We also do a thing called a benchmark that we do every month, which we calibrate. We understand where they are in terms of all the major KPIs that all our members are using to manage their business. Yep. And so you can kind of see how you sit relative to your peers.
Right. Gives you a good perspective on what's available in the market and where you kind of are and how you compare yourself to others, that are of similar size, basically, right?
Exactly. So sometimes you do have to kind of know where you sit to be able to make changes to the business that you have and create some additional efficiencies. So that's kind of the purpose of that. We have other things like the collaboration lab, where we actually bring in a handful of lenders that are similarly situated and have them kind of share ideas, and that's one of the beauty of the organization, actually, and the culture that we have been able to build for many, many years, which is that lenders, instead of viewing themselves as competitors against each other, we actually can see a scenario where people can actually support each other, understand each other's business better, and collectively we can grow the business. Now, it's a little tough in this environment where the volume has dropped so much, it's a sort of a, I don't know. We'll see how the next 18 months goes, but we're trying to survive. Get through the stay alive to fight the next fight, right? So.
Well, the good news is we're all kind of rowing in the same boat. Nobody's blowing the water out of anybody else. So we're all trying to figure this out together. And it's definitely we're in a unique environment that we haven't been in maybe ever or in a very long time. So everybody's kind of adjusting. But it's great to have a situation like you guys have with the collaborative, where you can at least understand what everybody else is going through as well, get a different perspective, so you don't feel alone on an island, like you're the only one experiencing this kind of stuff. So one of the things that you guys do really well within the collaborative that I talk with Kate from time to time about is y'all are very focused on technology. One of the things that I think you even have a whole separate group that just primarily focuses on that new technology coming into the mortgage space, kind of where things are headed, trying to get a little forethought as to, where the market's going overall. And one of those things that is here to some extent, but not to the degree that, it's really impacting things dramatically, but I think we're headed that direction, is blockchain. And, DeFi in general, where, looking at decentralized finance is what DeFi stands for, where you're seeing more and more, I guess you would call it lending opportunities or groups of people that aren't necessarily centralized into one location, that are starting to kind of create a new world of finance, I guess you could call it. So tell me a little bit about how this particular topic kind of showed up on your radar, and when you started really paying attention to it.
Yeah, thanks for that overview as well. But if I can just step it back just a tiny bit.
Sure.
And you mentioned our focus on technology within the Mortgage Collaborative, which we have. We have about 70 plus preferred partners or vendors within the network that sell into the network. Discounts, unique products, services that we have. And a lot of them are tech forward companies, right? And, point of sale tools to other things that lenders have utilized to create more efficiency in the business. AI, machine learning, to pull, data off of a sheet and move it into, your automated underwriting system or whatever, right? It's take something that was manual, convert it into something that technology kind of takes care of for you. What we have learned over the years is that a lot of those folks, really smart people that are building those technology companies, maybe graduated from really great schools, but a lot of them have never been in the mortgage business.
Right. They know about technology, but they don't know about loans.
Exactly. So sometimes they come up with great ideas, but it doesn't always kind of match up with exactly what the needs are from a lender perspective. Mm-hmm. And so we thought, it'd be pretty cool for us to build a kind of venture capital fund within the organization, where we make, and again, venture capital, you're making bets, and you're making hopefully intelligent bets, mm-hmm. but these are like very early stage, and so you're hoping that they kind of grow, build the company. And so what we wanted to do was to not only just make bets, but we wanted to kind of shape the future, right? Which was, let's have users of the technology be the LP or the limited partner, that is, you're the investor into those companies. Mm-hmm. You help pilot, you help shape the product, and because of the network that we have within the Mortgage Collaborative, you can scale that business, right? So the biggest issue with a lot of these tech companies is, they got maybe built a perfect mousetrap, but they can't sell it fast enough and they run out of money or whatever. Or
even when they get to scale, it runs into problems that they weren't ready for and that kind of thing, right?
Yeah, there's a lot of things. And so if you build to sort of this ecosystem, a support network, you can not only invest money in it, but also help them grow and succeed at the end of the day. And at the end of the day, that helps us as lending community do our jobs better. So we deployed that last year. We invested in a handful of companies. Obviously, everyone is a little gun shy about spending more money in an environment like this currently.
Yep.
But there's a lot of great opportunities. People are still out there doing technology development. There's still a lot of innovation still happening. So we don't want to take the foot off the pedal completely on that. We're still doing a lot of those work. But what I would say is that a lot of those things that we're talking about, all the technology we're talking about, is really Web 2 technology. Like if you think about Web 1, like way back when internet came up and we're like, hey, what is this?
Well, real quick, if you don't mind, because I think I know what you're talking about, but can you define what Web 1, Web 2, and then I know you're going into Web 3. Can you give like a brief what that means?
Sure. It's Web 1 was when the sort of the internet came about, and we said, whatever.
What is encyclopedia?
What is your website? Eustace.com or Eustace Mortgage, whatever it is. Right. We're like, what are we doing? So what is this thing going to help me with, right? Mm-hmm. But ultimately, it created a channel for commerce, right? People can find you quicker. You can engage the consumers Web 2 is really all that we're talking about right now. If you think about all the changes that has happened in the last 20 some odd years,
social media is a big part of Web 2.
Social media, like even if it's even like a lot of the like realtor.com or whatever, all the Zillows, all those things really grew out of the Web 2 environment, right? Interface with the consumer, apps, and all of these things to help create more efficiency in the business, right?
But very centralized, right? That was the big piece of Web 2. Facebook has all your user data. Twitter has all your user data.
Exactly.
Right.
So it's sort of big data, collecting all that and using that as a way of creating more efficiency in the marketplace and all that stuff.
Right.
Web 3 is something that it's at the very early stage, and really it's really the whole premise behind blockchain and crypto and all of this stuff, which is interesting enough. Everything is a pendulum, right, in life. And so centralized data, big data, all that stuff, DeFi, as you mentioned, decentralized finance, the whole notion is we want to pull away from someone collecting and controlling your data,
right,
to the consumer actually controlling the data, right? And that's kind of the premise, in some ways, behind the whole blockchain idea, right? Cryptocurrency, or all of that is, I don't want the Fed controlling my money. I don't want some other central bank controlling my money. It should be the consumer that controls it. Multiple users validating all of that, and that's sort of this this blockchain ledger, right? It's not owned by a single entity, single country, but it's owned by the people that are involved in it, right? Multiple computers in multiple places, double checking each other, all of that stuff. It seems theoretical and hypothetical to some extent, right? Because like, what does all of this mean? But frankly, there is, if you look at the valuation of crypto, just crypto alone, this last year, the value swung from like between 1 trillion to 3 trillion in valuation.
There's a ton of liquidity in the market allowing for that, for sure.
There's a ton of liquidity last year. Now, obviously, that has dropped substantially.
Correct. Yes.
As of right now, but it's still there, right? And I don't know. What is it? Ethereum is like, I don't know, it's like $1,600 or whatever it is, and it
keeps moving between 14 and 16. Trust me, I know.
Yeah, something. Yeah, I'm sure you got some money on that, but Bitcoin is at like what, 20,000 or whatever. It's a little low,
just hovering right around, a little bit below.
But it's not zero, right? And now there were some that went to zero. The crypto winter has been not kind to some, which is a good thing, I think, overall, because it's a new space, right?
Well, it's kind of like the .com, back in the early 2000s, where you had every company on the planet was the next, we're going to have the best website, we're going to be, and everybody was throwing money at it. And if you go back and look, 99% of those are gone. They're not around anymore. So you have your Amazons and Yahoos that made it, but
what was that company that bought that like very expensive ad? It's a dog food company or something, that Super Bowl ad, and they were out of business like relatively soon after that.
Yeah,
spent a ton of money. So I mean, you're gonna have that, people throw money against stuff.
It's a new technology.
It's new technology, and some people. But I would say the main components of the business or that sector is still there, right? There's still volatility. There's no doubt about it. The thing that I am, sure, you can bet on whether, Bitcoin, Solana, Ethereum, or whatever is going to move or down. At some level, I'm not as interested in that.
Correct.
So that'll figure itself out over time. But the underlying technology is what's very interesting. And
that's the thing I would like for you to explain, because the difference between blockchain and crypto, a lot of people put it all together, right? And it's not. Blockchain powers cryptocurrencies, but really blockchain is the thing that we need to understand. And I think we talked about this before, that people kind of make it complicated. It's really not that complicated. So can you explain in your simplest, to help us monkey brain people understand what blockchain is and what it actually does?
Yeah, blockchain is basically, you think about it as a ledger system, right? We're just keeping track of transactions, basically, and that's all you're really doing. But it's controlled by multiple people, multiple computers,
right? That
is making that happen, right? So you're double checking on each other. So no one person. That's why one of the great things about the blockchain is it has not been hacked, right? itself.
It's immutable.
It's immutable. It's once it's in, it's constantly, so not, it's impossible to hack. It hasn't been hacked yet. I mean, it's maybe one day that could happen, but where the siphoning of data happens typically is when it goes the pathway in or pathway out. Sometimes
Yes.
it does, but it's the ledger itself has not been hacked. And so it is if you think about that, think about how powerful that is as a underlying system. And what you can do to kind of leverage that, right? So
well, and the transparency factor makes a big deal as well, right?
That's right. That's right. And no one person owns it and all that kind of stuff. And you think about all the way our current system monetizes, whether it's title insurance. I mean, there's been a lot of discussion for many years about whether this will eliminate title insurance at some point. It's a tough road, right? Because a lot of people's jobs tied to it.
Theoretically, I think you can, but I don't know it. Theoretically, and getting there a whole other thing, right?
It is, and I think in that, when you have a legacy system like us, right? Because we have an industry, very massive industry with lobbyists and
yes.
A lot of jobs tied to everything. It's hard to change. I do think those changes will happen in other countries before it comes to us.
Yes,
and we will see some efficiencies in other countries first.
We won't be the trial stage. Somebody else will.
Yeah, it's like the whole cell system, right? If you think about the cell, a lot of other countries leaped ahead of us because we had legacy system, we had wires and all that, and we were kind of relying on that. And so other countries kind of leaped ahead on that. I think it's going to happen in some ways with blockchain as well, where people don't have the same kind of legacy system kind of tying you down. So I do think, I think the credit system is also ripe for change, to be honest.
Your personal block. I always had that theory where I think one day, right, which is put away out there, but you would have your own personal blockchain, right, where you could say, okay, all of my bank transactions, all of my payment histories, everything that I've ever done financially is recorded on a blockchain, which is transparent. And when I go apply for a loan, I can give the lender or the bank or whoever access to that blockchain. And then there's an algorithm, AI, that basically determines your credit score based off your own personal information, because then you don't have a third party that's making mistakes or putting something on there that's incorrect. Essentially, you get control of your own data and provide it to lenders in order for them to evaluate your ability to receive credit. Is that how you would look at it too?
Well, absolutely. Well, think about this. Think about the 3 credit repositories and what they represent, right? I think collectively their annual revenue is something, I don't know, 15 to 20 billion, and their profit margin is relatively large.
Yes. And they're selling all your data.
Yeah, and about 40% of the time, it's not completely accurate, right?
Correct.
So because all the 3 repositories have slightly different information, and so that is one area that I've been looking a lot at more recently about how do we transform the credit reporting, credit collection process, and how do you give more power to the consumers in that process as well. And so the blockchain could be an amazing answer to that. Now, there are obviously things that you have to do. You have to, as you port information in to the blockchain, right? We're thinking about the future, right? And so, and these things will ultimately transform really the crypto side of the world as well. But, you have to be able to validate it, right? Because once it's in the blockchain, it's very hard to change, right?
Correct. Yep.
So it's not like you can go to your TransUnion and say, hey, that's not a Jim Park, that's not me, Jim Park, or some other Jim Park, right? And then they can correct it over some period of time. It's not that way in the blockchain, right? So it's a tougher adjustment at the tail end. But if you can get the data correct up front, then you're protected forever, right? So
yeah, the big issue, I guess, would be the transition, right? Because you can imagine a world where everything already exists that's being recorded on the chain, all your transactions, because then they don't, your bank transactions, your payment history, all that kind of stuff. But it's really how do we go from analog to digital, and transfer that data over to make it all still, make sense. And I think that's the biggest hurdle that we're probably dealing with when it comes to adoption of that, right?
There's a lot of change, a lot of things would have to change, right? You would have to have the investor, the GSEs, FHA being willing to take certain kinds of different data. again, I mean, the one thing, this is what's an exciting thing about this whole piece, right? The whole Web3, all of the DeFi stuff it is not going to just be business as usual. It's going to change the way we think about the business, right? And I'll give you an example right now. I'm involved right now with a kind of a real estate metaverse. It's called Propiverse. I'm providing some. Am I betting on the future? I don't know exactly, but I'm interested in it because what's happening is people are using like metaverse typically as kind of using it as a kind of a gamification of real estate, or they're having boat parties and I don't know, whatever those they're having in these metaverses. But there are practical uses of them ultimately. Mm-hmm. It's not quite there yet, but ultimately it will get there, because think about this. You think about all the international real estate transaction that happens, or even instead of you having to fly to Florida, or you live in Texas, coming to Arizona to buy a property, you can literally imagine a scenario where you can put an Oculus on, yep, and you can do a site property tour, augmented reality with a realtor that could meet you on site, yep, having a conversation in the metaverse about a property. You're already seeing people like Walmart and other folks setting up shops within the metaverse so you can go and shop within it. Right. You have avatars of yourself with credit cards going around buying stuff within the metaverse. Mm-hmm. You think about, we think about this as like, the early days of what's SimCity, like, having a little fun.
Love that game. Yeah.
Mm-hmm. Right. But now it's like, there's like practical application that will change the way we sell and buy real estate, and potentially even finance real estate.
Yep.
Within the metaverse.
Yep.
And so if people don't think the future is right around the corner around those things, they're like, you need to pay attention to it. You don't have to put money behind, whatever Sandbox or whatever, but just watch what that's
learn.
Be involved, because I'm seeing real estate companies buying up signage and real estate within the metaverse. Yep. I see there's a Sotheby's in Florida that is building a brand new luxury home in the metaverse and the real world at the same time.
Oh, wow. Okay.
Right. They're using that as a way of creating awareness and branding and interest. Right. So these things are going to change. Happening. It's not only, it's happening, and it's going to change the way we think about the business overall. And so stay close to that. I have a friend of mine there's a company called Propi that is converting homes into NFT, and you're able to buy the property as an NFT. So the NFT actually has a right to purchase, or has rights to that LLC, and so you buy it with Ethereum, like so smart contracts. So its execution is instantaneous. Yep. Right. And so instead of a 45-day period to buy a property, you're like making it instantaneous.
Correct.
Right.
So now, real quick, I don't mean to. I want you to go back to NFTs, okay? Because again, we talked about this earlier. Anybody that's watching this probably has like this much understanding of how all this stuff works. I'm a geek when it comes to this stuff. I know everything that you're understanding, but I want to know, or I want you to explain to people what NFT is, because I think it's a hard concept. Because somebody says, well, and it started with art. Art was the first thing to kind of get into the NFT space, or collectibles, let's call it that too, where you say, okay, I have this, I'm a Dallas Mavericks fan. I live here in Texas. We watch the Mavs. So I got a rookie Luka Doncic NFT, right? Yeah. And I say I have it in my wallet. I don't have one, but I have it in my wallet, my crypto wallet. It's a cold storage wallet. And I say, hey, look, this is what I got, and it's worth whatever amount of dollars. And my friend goes, well, wait a minute. That's just what if I just take a picture of that thing? I have it too. And the answer is, well, no, you don't. Well, so explain to people why an NFT is what it is and how it holds value.
Well, so you used a perfect example. So right now you have a Luka Doncic trade card, rookie card, and you said, hey, this is worth whatever amount of money, right? You're like, it's worth, if you put it in the marketplace,
$50,000,
$50,000, whatever, who knows, whatever it is,
10 grand.
But instead, you can say, hey, this is the only one out there. But how do you know it's the only one out there?
Right.
So in the real world, I would say in some ways, the other term that people use is on-chain and off-chain.
Okay.
So you use the term on-chain means you're in the blockchain, right?
Okay.
NFT, all that crypto, you're on-chain because that's who's tracking all the transactions.
Right.
So we talked about this with immutable ledger. People double check everything. You can't mess with it. So I'm going to put my NFT, Luka Doncic NFT, on the blockchain, this electronic version of that trade card.
Yep.
You know for sure there's only one.
There's only
you
one.
don't know for sure that there's only one of the physical card. Because there could be like 5 others or 20 others. You don't know. Right?
It's not verifiable in the real world. You can't verify it unless, without a ton of work and, going through it.
Unless you have a Mona Lisa,
right,
or whatever, then you kind of know that there's one.
And even then there's still doubt. You have artwork all the time now that says, well, this was a Da Vinci, that we found. And like, how do they determine it was actually a Da Vinci? There's no way to really know without going back there and watching him paint it. You have no idea, really.
Exactly. So the real world, you're betting on a lot of things to say, okay, this is the original, right? Yeah. And you don't even know if there's only one of them. Right?
There's no way to verify it.
In the NFT environment, in NFT or the blockchain environment, for sure there's only one, because electronically it's that particular thing, the non-fungible token, is tied to you because you own it. Right. There is no one else that owns it. So when you decide to sell it, it transfers, right?
It's a one of one. I've heard it put before. It's one of one.
It's one of one. So that's the thing about the whole NFT thing, which is, now people go, well, but it's just some like, it's vaporware. It's like, it's out there. Who cares, right? Yeah, it
only has the value that people place on it, just like anything else. If I'm into Pokemon and you're not into Pokemon, and I have a bunch of Pokemon cards and they're worth $10,000, well, you may look at it and go, well, I don't care about Pokemon, so it's not worth a nickel to me. It's all how you place value on it.
Yeah, the good thing is that there's a bunch of people who like Pokemon, and they trade it and they place value on it. It's the same thing with cryptocurrency. We're placing value on something that's of limited quantity, right? And so that's all it is. NFT is sort of an electronic version that's tied to a specific person. For sure there's only one when you say there's one. Now there's NFTs that have said there's 5 of these or 10 of these. Again, you own number 9 of the 10 or whatever, right? So, but again, but what happens is you can see how you can tokenize. So this term, non-fungible token, tokenize certain things, and you can trade it just like this Pokemon NFT or a Bored Ape or whatever it may be.
You can trade it immediately to anybody on the planet.
Exactly. Yeah. And so that's what people are piloting right now. So Proppy, I believe they recently have done about 4 or 5 transactions this way. So they convert a real estate into an LLC, and that token has rights to that LLC.
They might create 20 or 30 or 50 tokens or whatever they decide that they want to mint, or whatever you want to call it.
They mint it, and so you basically you're selling that.
You're buying 1/50th of that LLC that also owns this property that may be income generating or whatever.
Well, I think that the interesting thing about what you're raising is around the sort of fractionalization of tokens. Right now, those, as far as I know, they're just doing the entire property, so it's not like they're not fragmenting it. But
they haven't there. So you when you buy the LLC right now, at least when you buy the LLC, you can't just buy a portion of the LLC. You have to buy the
you're buying the whole thing. You're buying the whole thing.
I thought I've seen a few places that do it, but maybe I'm.
No. I think if some people are testing out that idea as well. Tokenization, that's fractionalizing ownership. So you have a piece of. It's like having what's that real estate thing? Is it Picasso
REIT?
It's like a REIT too. But like there are people who are buying fractionalized real estate, right? Like Picasso, I think, is the company that's out there doing it. There are a few other firms doing those things, but this is through blockchain tokenization. So, again, the idea is this: it's like we're so used to, making an offer all the way to close being a 45-day process or even longer, right? That's what we're used to. Imagine a scenario where it becomes more instantaneous, right? Through tokenization, getting these things. Now, even that tokenization right now takes a long time because you have to set up the LLC. There's a lot of due diligence that's go in behind it. So there's a lot of work the bid. But that's going to change over time. Everything's going to compress in time, and
the efficiency will get better. The knowledge on how to put it together, the more people that buy into the technology will be greater, and therefore the demand will go up.
exactly. So I think the way we're going to sell and buy real estate is going to be very different down the line. It'll be way faster.
Yes.
Now, real estate people that are holding on to the current environment, they're going to be shocked, I think, 10 years from now how things will change, right? And so you have to kind of look ahead a bit on that. I think same thing with lenders, right? We as a lending community has to kind of be a little bit further, like we have to look ahead. We have to stay in the focus on the business we have right now, and just make sure that we're taking care of our clients and our employees and the business we have. But you do have to kind of look a little further ahead and see how that's changing. Like there are some crypto banks that are popping up, as you know, and typically the lending business on that side is primarily what I would view as kind of collateralized lending. So you put in $2 million worth of Ethereum and they'll lend you 800,000 in USD, right? And you can sometimes with almost no interest rate or very low interest rate.
It's collateralized lending because you actually have some sort of asset that's backing the funds that you're getting for it. Typically.
Right, and there's a margin call. So if the value of that Ethereum goes down, and you have to go, hey, you need to replace that. You need to keep that value at 2 million.
Yeah, it's very similar to borrowing on margin with stocks or anything else, right?
Exactly. It's basically that same concept. Now, over time, that will change. We talked about the credit system that we were envisioning for the future. A credit system that looks at both like on-chain and off-chain data, right? If you could collect both of those and build a scoring model behind those two, then you can convert that into not only collateralized lending, but it's credit-based lending, which means you'll be able to really leverage the lending and not do what they do now, which is it's a deleveraged lending system or reverse leverage system, right? Currently, because you're getting less, you're getting back less than what you're putting in,
right?
So, but those things will change, and one thing that shocked me actually is reason why I kind of got into looking at this issue more is in 2021. If you look at all the first-time buyers in 2021, and I think Redfin did this study where they looked at the down payment and where did the down payment come from?
Oh yeah, I saw this too.
12% of first-time buyers, right? These are generally younger buyers. 12% of first-time buyers use some form of crypto towards down payment. That number is shocking, right? I'm like, you would never think of that high, but
to clarify that real quick, when you say use it, because I saw that too. It's not that they bought their house with Bitcoin. It's that they sold Bitcoin or they sold Ethereum or whatever to get the cash, so then they could use it.
That's right, and then they have to season it and all that. Right. There's seasoning requirements and all that. But that's even kind of inconsistent. But
it's verifiable. You can go onto their wallet or their Coinbase account or whatever platform they're using as an underwriter, and you can say, okay, where'd this money come from? Because we're looking for the deposits, and now I can go see what they sold. Whatever $20,000 worth of Bitcoin. Okay, that's where it came from, and it's all something you can track.
Right. Ultimately, someone will figure out a way to, and then some people are already doing this, right? Taking, I as a seller will take Bitcoin or Ethereum as
actual currency. I don't need to convert it.
And there are title companies that are willing to record it that way, right? So,
there are already title companies that you can bring Bitcoin or you can transfer Bitcoin. They have like they have a wallet.
Yeah. So when we sit around like, hey, the world's not changing around us, it's not going to change. It's happening like right now, right? Yeah. And so if you're willing, like I can see developers doing the same thing, right? You can go so let's say a lot of us put money down for 20% down for some pre-development kind of construction that's not going to happen for 2 years. If developers are like, hey, I'll take Bitcoin or crypto, any kind of crypto as deposit. I mean, that's going to change a lot of things, right?
Yes. So where do you think ultimately, because we're I don't want to hold you for too long. We're at about 35 minutes and I want to let you, I know you got a hard stop here, but as lenders specifically, okay, not even necessarily real estate in that side of it, but lenders specifically, what's the most immediate thing that you think we're going to start seeing impacts on in our business, and that lenders and companies, and members of the mortgage collaborative, where do they really need to focus their attention on in the short term right now to be ready? That's really starting to creep into what we do.
I think we got to pay attention to the amount of cryptocurrency that are going to start to be used towards down payment and other. I think that's going to be more immediate. We already saw it in 2021, right?
Yeah.
Like 12%. That's a large number.
Yeah.
We'll see what that number looks like for 2022 because of the volatility in the market. The value probably went down, so I'm not sure what that's going to look like.
Are the GSEs starting to look at kind of redefining their rules and what they allow for to kind of work this in?
My understanding is that there is some set of rules around seasoning and all that. That's there, and I think that's and banks sometimes have a different rule. Some certain banks will look at different seasoning requirements around this stuff. I mean, I talked to some folks, like, let's say in places like Seattle and other places where there is high volume of crypto investors. I talked to one friend of mine that's based in Seattle. He's a lender there. He said almost 50% of his first-time buyers come in with some amount of crypto. Wow, it's sort of mind-boggling, right?
That's crazy,
right? And so they have built some processes around, like, how do you take that? How much seasoning do you do? It's going to become much more widespread.
Yeah.
And as an industry, we have to be a little bit more consistent on how to treat that, overall. So, is it going to change the world immediately? Probably not, but it's happening. It's happening under us right now, and we don't even know it's happening, right?
Well, I think it's one of those things where right now, because we're so, as an industry, we're so focused, and really, everybody is focused on where the economy is right now, where it's at, where it's going, what's happening with rates, what's happening with home prices, what's happening with institutional investors buying up real estate. All these things are a big focus and concern for our industry as a whole right now. But what I think is, once we come out of this, which we will, they're all cycles, they come and go. Once we get out the other side of this, I think that's when you'll really start to see this kind of stuff kind of slap us in the face. And if you haven't been paying attention to it, or at least being somewhat aware of what it is and being, educated on general terms and what this kind of stuff is, you're not going to be ready for it and you're going to be left behind.
Absolutely. And I think the thing that we have to remember is that the way this technology, the Web3 environment, will force a fundamental change in the way we conduct business. And frankly, the thing that is an opportunity, but it's a little scary, is that the consumers are going to have a very different level of expectation about timeline, transaction, efficiency. All of those things are going to change, and we have to be ready for it, right? As a community. And that's fundamental change. Broad change is going to take a long time, but pieces of it are already being built, and so as a community, we should continue to have this dialogue. I think people have to be more exposed to it. I think, Mike, you bringing this kind of topic up to the industry as a whole, I think it's a good thing. We need to do more of that. Yeah. And bring in, some of these people who are the outliers right now, testing these things out. We should get to know them better, right? Yeah. And engage with them now.
Well, and there's going to be opportunity. And I think that's the biggest thing. Like for me personally, that I've looked at this and said, okay, I've been in the mortgage business for 12 years now. And, I'm very familiar with how it all works. And, we have a great company and everything's going fantastic. But this world is coming, whether we want to acknowledge it or not. And there's going to be opportunity for people that can bridge that gap between the old world and the new world. It's just like you said before, there's a lot of technology coming in, and these people that understand the technology don't necessarily understand lending and housing and how all that stuff fits into that world. So if you can position yourself as a loan officer, as a branch manager, CEO, whatever your role is in lending right now, if you can position yourself to understand the two worlds and how to put them together and what that merge looks like, there's a ton of opportunity for individuals to really have a lot of success with this because you're going to bridge the gap, because there's going to have to be a bridge between the way we used to do things and the way we're going to do things. And that's where I think the real opportunity lies.
Yeah, absolutely. Absolutely. Yeah. I think the piping behind Web3 is being built for different components of the industry, or not just the lending industry, but for the marketplace as a whole, right? Yeah. And we should just pay attention to all of that.
So one of our quick questions here is they want to know, with blockchain dApps, which are the DeFi apps that are starting to show up, tokenization. Should we be focusing on a digital division in our industry
within the company?
Yeah, I think so.
Yeah,
Perhaps.
yeah. I don't. You know, it's not clear yet. I mean, I don't. There are these crypto banks that are popping up, right?
Mm-hmm.
They're more and more. Uh, even the Fed is, in this whole digital currency thing.
Yep.
Congress is looking at some regulation around all of this stuff,
which is good, which is very good.
Yeah, I mean, having some standards and all that. Now the question is, if you start to impose too much like restrictions, then your innovation will slow down quite a bit. But it's a fine balance. Like you don't want people getting abused. Like people lost a lot of money in this crypto winter,
Yep.
and so you don't want that again. But you also don't want a bunch of restrictions that doesn't really create the innovation that we need to see what the future looks like. So.
Well, it's a very, like I said, it's one of the topics I don't want to say obsessed with, but a little bit. I really have a lot of interest in this, and I encourage people, even when it comes to cryptocurrencies, I tell people, ask me all the time because they know I'm like, my circle of people know that I'm really into this. They'll call me and say, what should I buy? I'm like, listen, what you should do first is learn. Okay. So if you want to learn about Bitcoin, go buy $5 worth of Bitcoin, because you can buy $5, you can buy $2, you can buy whatever you want. And just pay attention, just look at it, learn a little bit. YouTube University is the greatest thing on the planet. You can learn about anything you want to learn about, but educate yourself on what this is. Don't, I think the reason people lost their behind, when everything collapsed, is because you had a bunch of retail investors just, seeing money dollar signs and throwing every nickel they had at it, using leverage and all this other stuff. But I really think that the key to all of this is you have to understand what it is, what it can do, and then you'll have a better picture of how it's going to impact your life, and you can make decisions based on that. But until you know the technology, or at least have a grasp on what it is, then you shouldn't be sticking a bunch of money into anything.
Yeah, I think to your point, crypto and all that as sort of an investment, a bet on the future. Now, people who bet on that future, let's say 7, 8, 10 years ago, you put $10,000 in, they're like gazillionaires now, right?
Yeah.
All those folks. Maybe that level of opportunity isn't quite there, but it's still early stage. I mean, this is all still very early stage technology, and I think the thing that's very interesting is beyond making bets on the future, which I would just say, be careful, right? Yes. Don't go crazy, as you suggest. If you want to see what it does, just put a little bit here and there and just follow it, see what it does. Don't bet your house on it or whatever. No. But the thing that's amazingly interesting is the way it's going to transform this business. And it's starting to happen already. And we should bring some of those people in that are innovating into your discussion, and happy to support that discussion as well. So.
Well, Jim, I can't thank you enough. I really appreciate you, giving us a little bit of your time. I know you're a busy guy, and yeah, if you have anybody else in the industry that that really is heavy on this topic, I'd love to get their name and chat with them a little bit more, because I do think that this is something we need to talk about more and more these days, because I do think it's coming, and everybody needs to be kind of aware of it. But again, thank you for taking out some time during your day to go through all this. Thanks to Kate for hooking this up with you so we could chat about this. I know it's early over there in California.
Kate is the best.
She's awesome. She's awesome. So I really appreciate it, Jim. Thank you again for your time. And, we'll have to do this again sometime once we get a little further down the road.
All right, let's do it. Thanks, Mike, for having me on. I appreciate it. Okay.